It's an interesting set of numbers that we're talking about today. We're talking about retail flows and what they're indicating. There are murmurs to suggest that there could be tweaks in the regulations that govern trading activity, and we'll have to see what direction that takes. But those murmurs are suggesting that retail participation could in fact be affected by that. But the numbers that we've seen in the financial year so far seem to suggest that that's far from anybody's mind, and Sajith is going to break that down. And we're also going to talk about primary market action, because boy, look at the numbers there. Neeraj is going to talk about some of that. But let's first talk about retail participation. Is there anything to suggest that we're peaking?
Let me start with the number first. In the first quarter of FY25, means April to June quarter, we saw retail investors investing net in mutual funds of nearly 94,000 odd crores. And that compares to 1.8 trillion which was there in FY24. So half of last year's inflow, net inflows, have come in the first
one quarter.
One quarter. Now, is that an aberration? My view is that it is an aberration, because we had a June event which came in with respect to elections, and it was a huge volatility, and retail may have participated in big amount, and that's why we saw 40,000 crores coming in June alone, while the average has been 20 to 22,000 crores every month.
Yeah.
So it's a double the amount.
And 40,000 only in actively managed funds.
Actively managed funds. So that, and equity funds basically.
Yeah.
So that's something which is coming in there. Look at how individuals have been doing in the first 2 months of this financial year. In the cash market, we had really 24,000 odd crores of net buying which happened, and this compares to nearly 47,000 crores happening in FY24. So again, there's huge amount of retail activity there. If you look at individuals' market share in the cash market, that's gone up to 35% now, which basically means that DIs and FIs share have shrunk a lot, and a lot of retail money is chasing there. In the equity derivative market, a fourth of the market is now retail investors investors which are doing small trades and other stuff, and that's also worrying.
It's gone up from what, Sajith, approximately?
It was in single digits few years back to 25. If you look at SEBI came out with some numbers maybe a couple of weeks back, and they said that in 2018-19 it was around 9 odd percent, which has gone up to 40 odd percent in some categories, right? So that is also something which is there. So where are we going from here, and how retail is going to impact the stock markets? The big question is that my sense is that inflows are going to cool down a bit, not only just into mutual funds, but also into the capital markets as well.
But why?
In the cash, and two things. In the mutual funds, the level of cash which has been held by many of the schemes are increasing. There was a time when they used, we used to stare at mutual funds when they used to hold 2 to 3% in cash. Now it's 5 to 10% in many of the schemes. Many of the schemes which are now being launched are not sustainable. Within a month, they are closing down because they can't handle the money.
Yeah.
So, how are you bringing that money, and where are you deploying? If you are not able to deploy, that means there is an issue with valuation.
I do want to put a caveat, though. The schemes that are closing, and Neeraj can weigh in on this as well, thematic and sectoral funds.
Exactly. But then they are not sustainable.
So depth is not there, right? Yeah. But the broader markets, they're not. In fact, if anything, you recently saw a Kotak small cap fund opening up for subscription once again.
True, but at small cap funds, we have seen small cap and mid cap funds also closing down for or getting restricted flows because they're not able to do it.
No, that's a fact. Yeah.
Simple as that.
Playing the devil's advocate, if you take a 5-year view, right, we've seen instances of people saying demand is peaked, numbers have peaked, funds are closing down, people are being cautious, and over a 5-year period, we are at a number, or the number 5 years ago is a fraction, literally a fraction of what the number is now currently. So who is to say whether this is the peak?
No, I'm not saying this is a peak. I'm saying that is there a runway ahead, or there's a pause ahead? That's the question that I'm asking.
I mean, the numbers right now in quarter one, as Sajith says, to my mind, point to that has a deluge come in and maybe it will trickle down.
Yeah.
But could it be a factor of what the markets do?
Because the retail is not getting the returns of that, right? If you're going to park your
I
money into
wouldn't say
cash,
that. I would say
I'm
that.
arguing against that.
No, in mutual fund, if you're putting your money and the money goes into cash, you're not getting an NAV return here.
But the
that
rest
doesn't matter,
of the
Sajid.
portfolio is doing
The rest of the
incredibly
portfolio
well.
is doing well. You're getting better than FD rates.
Much
Could
better
be.
than
Much
FD.
better than FD rates.
Could be. I'm not saying that.
And the
but
other
point
aspect,
is that
And by the way, sorry to debate
Yeah.
that point once again, it's only a few funds which have taken these large
Yes.
cash calls, not everybody.
across the board, every large
3-4%.
mutual fund,
3 to 4%.
more than
It's
that,
only
more than
Paramparikh,
that.
etc., which are at 10%.
No,
Correct.
But most of them
Okay,
are
this
at
debate
average
can go on.
5%.
But having said that, and one last point that I will mention, and I know that we debate this in the newsroom on an ongoing basis, but every month since the month of July last year, you've had a new gross SIP flow. And I'm saying this very specifically because I know Sajid is going to try and counter
look at
me
the
on
net
this.
number, yeah.
Right? He's going to say, look at the net number. But we've had conversations. Let me complete this statement. We've had conversations in the past with veterans of the industry that have pointed out that when SIP flows were 12,000 crore on a gross basis, even then it was 50 to 40%, 40 to 50% was the net number. So that net number itself has doubled or practically doubled, which means that there is still a deluge of money, much more than what was coming in earlier.
Let me come back to you on that one. If you speak to veterans in private, they will tell you that there's a huge redemption happening through SIPs, and the net SIP numbers are much lower than what is been projected by AMFI, and AMFI has been very
cagey about it.
Cagey, and they're not being fair and transparent in the way the numbers.
That I will agree with, because we asked repeatedly.
We have been asking repeatedly for last 2 years of data on net SIP flows, and AMFI is saying they don't have it. While
and they don't compute it.
No, they don't have it.
They said that they don't compute it.
But the same numbers are provided to all the AMCs on a monthly basis.
So that's something to take up with them separately.
But my point being here that retail flows, retail is getting targeted. Not only from a regulatory but also from a policy point of view. Your margining system is getting tightening for them. You have make direct margins, so leverage is getting reduced in the cash market for them. And going forward, F&O market leverage is also going to be hit, and so there would be a reduced participation of retail. This 25% share in F&O, 35% share in cash market is becoming a little bit of worry for the policy people. Simple.
Can I just add my final point on this before I get to my topic very quickly, and I'll make that quick. If anything, if all of this happens, it will actually turn out to be a blessing for the mutual fund industry, because people will realize that they can't participate so much in F&O, etc. Let's go down the mutual fund route. So all I'm saying is, for the last 5 years, we've heard comments about how the numbers are looking like peaking out. We are much higher than what we were. How high can we go? And we've gone higher. So I've stopped preempting what the number could be like.
Very true.
You look at global examples.
I thought so.
You look at global examples. These trends don't get over in 5 years.
Absolutely.
They last for 20 years.
Let's put a pause on this this particular conversation, because we can go on with this. There's one more point that we need to talk about, and that is the primary market, because that is back with a bang.
So, Alex, actually, not just primary market. The reason why I thought this makes an addition very well to what Sajid was trying to say is that if there is a substantial demand, that is necessary because the quantum of supply is literally a deluge. And look at the numbers. I have borrowed it from the Access AMC note that was written. They're saying the quantum of IPOs over the next quarter is 3x the IPOs in Q1. So therefore, the quantum of primary market supply, paper supply, immediately in quarter 2 is very high. That's part one. The IPO pipeline over the next few months is over 90,000 crore rupees.
Yes.
Forget the nature of the IPOs, that it is not being used for capex, it's being used for promoter. That is a separate argument. But the paper is coming to the market. So that's a large quantum of paper coming to the market. It needs demand. Part two. And it's necessary, by the way, for the paper to come in, because the market needs to broaden out by virtue of the supply that is coming in. Otherwise, the expensive stocks become more expensive. But it's not just the primary market paper. The PE stakes in public companies is substantially higher. At some point of time, all of this will come. Access note suggests that it is over 2 lakh crores. This is a large quantum of paper coming and hitting the markets over the next 9 to 12 to 15 odd months. We better have the participation that we have currently, or else we are looking at a corrective move in the secondary markets to account for the money that is being raised through the primary market.
Yeah.
Just to add to you, 90,000 crores coming in, 45,000 crores have to come from HNIs and retail from them. So that's the kind of liquidity that is required from the retail. And when you talk about 2 lakh crores of private equity holdings which is there, and they have to come into market because they have to exit, that will entirely go to DIs and FIs because they come through block deals.
Yeah, that's a fair, and which is why we've already been seeing so many block deals. Anyway, it's been a fascinating conversation. I don't think that we have a conclusion, though. Some of us have made some conclusions, but maybe you had a few questions about retail participation, and this has helped you along. Let us know what you think about the conversation that we've just had. We've got lots to talk about before the start of trade, particularly to do with F&O, because it is, of course, options expiry day.